In this screencast, I want to take a deeper dive into cost allocations. We wanted to look at an overview of the problems that are associated with cost allocations, which problems we can solve, and to some extent which problems are challenging for us to solve. So we're going to assume that the example we're going to use is one of mostly overhead costs being allocated to work in process, but what we're going to cover today would apply to pretty much any cost allocation. It turns out that if we understand the nature of the cost, it will make a difference. So for example, we're going to first look at pure fixed costs. Then if the costs to be allocated are variable costs, and then what happens when the costs to be allocated have an unknown cost structure. So the problem is how to assign costs in order to transfer the balance from one account, for example, overhead, to one or more downstream accounts, for example, jobs and work in process. In this slide, I'm showing you some pictures in which we have the overhead resources. So the overhead resources are measured in this direction, and then the base that we're going to use in order to allocate those resources are measured from left to right. So in picture 1, right, you can see that's a flat line, and that would be somewhat consistent with a fixed cost, right? In other words, it doesn't really change regardless of what the level of the base is. In figure 2, in this case, as the base increases, the resources used decline. And then in case 3, we get a positive relationship, where as the base increases, then the amount of resources used increases. That would be consistent with the resource being a variable cost. So as you can see, that depending on the nature of the cost, some bases are definitely better than others. Now, to be specific here, the costs, right, are going to be added to work in process or perhaps to an overhead account before they get assigned to work in process. So we would like to choose a base such that as the base increases, then the cost increases. Of course, we don't always know whether that's going to occur, but that is the sort of relationship we would like, because as we add costs, we would like to think that those costs represent the use of resources. So let's look at pure fixed costs. So in this case, I'm looking at, say, the total amount of the, say, overhead resource is $20,000, and that stays constant regardless of the level of the base. So as the base increases, the overhead doesn't change. Now, if that overhead is going to be assigned to two different jobs, say, job 1 and job 2, well, the way I've drawn the picture is mostly to depict the idea that if we only worked on job 1, then the amount of the resource used would be $20,000. And if we only worked on job 2, the amount of the resource used would still be $20,000. Now, if we work on both jobs, then the resource has to be allocated, right? Some of the overhead should go to job 1, some should go to job 2. But in the end, the total amount that's allocated should be $20,000. And really all we require is that the sum of the allocations equal $20,000, and of course that each of the allocations should be greater than 0. So is there an answer as to how much overhead 1 should be and how much overhead 2 should be? And I'm afraid I think the answer to this one is no, that whatever allocation you come up with is essentially arbitrary, because there's no clear relationship between the amount of resource used, right, which is going in this direction, with the amount of the base that's used. So in a case like that, you have to come up with some rule for splitting up the $20,000, but it's hard to say that one rule is more justified than another rule. Now let's take a look at pure variable costs. In this case, I've drawn it so that we have two jobs once again, and whatever the base is, we have quantity 1 being used by job 1, in which case you can see that if we go up and then reflect that off the line, we can see that we get the total amount of the variable cost. And if job number 2 uses somewhat less of the base, then the variable cost is going to be less. As is typical for all pictures of this sort, the variable cost per unit is given by the slope of the line, and the total variable cost is given by the Q1 reflects off the line. So in this case, I would say the problem is solved, because the total amount of variable cost is going to be equal to the sum of the variable cost for job 1 plus the amount of variable cost, right, assigned to job 2. And if all of the cost to be allocated were variable cost, then it turns out that the problem is solved if we can just figure out what the right base is. And once we have the base, then we need to figure out what the relationship is between the base and the total amount of the variable cost. But experience should help us come up with an estimate for the variable cost per unit. And once we have that, as I wrote down here, the problem is solved. Now, what happens if we have an unknown cost structure? So perhaps then we could estimate a fixed and variable portion, but that already assumes we have a fair bit of knowledge. For example, in drawing this scatter graph here, I'm assuming that not only can we measure the amount of resource used, which is sometimes a little trickier than it seems, but also that we know which base is giving us this sort of relationship. We may not actually know what the base is, or we may not know whether there's more than one base that's at play here. So that's the kind of problem we need to work with and need to take a look at. So in order to address this, I'm going to use a mathematical example, and this is going to be slightly more sophisticated than some of the other math that I use in this course. But as you're going to see as we go through it, we have a certain amount of structure that we really need in order to see the problem. In equation 1, I'm going to assume a cost structure. Now, we probably don't know what this cost structure is, but for the sake of argument, I'm going to assume in some cases that we do. And the cost structure here is a fixed cost of $100, and then $20 for each labor hour and $30 for each setup. I'm also going to assume, in order to make this a somewhat more interesting problem and also to keep the amount of math from getting even more complicated, that the relationship between labor hours and setups is such that knowing the setups tells you nothing about the number of labor hours. So in this case, the equation I'm using is labor hours equals 8 plus 0 times setups. In other words, if you put in any number you want for setups, it really doesn't influence what the total number of labor hours are. And the 8 there will just turn out to be the average for labor hours. So let's assume we have a little bit of data. And in the example I'm going to use, we have 3 data points that we might look at. In the first data point, the total cost to be allocated is $320. And there were 5 labor hours used, and 4 setups. In the second data point, the total cost was $500. 8 labor hours were used, 10 setups. And in the third case, $340 of overhead, say, was incurred. Labor hours were 11, setups were 4. Well, it's always good to graph things. And if we graph the costs versus the labor hours, well, here we're getting a shape that doesn't look very helpful to us. Remember, the most helpful shapes are the ones that have some sort of a positive slope to it that indicates that there's a variable relationship between the base and the amount of cost. If we use the setups, we get a better relationship. Looks like this. Unfortunately, of course, we see that we have 2 cases where the amount of the setups was 4, and we get 2 different costs. So that tells us that the setups alone can't really determine what the cost is. So we're going to look at this data and see what it might tell us and how we might use it. Well, we might, for example, decide to apply some of the techniques we learned earlier and come up with HighLow estimates. If we decided to look at the relationship between costs and labor hours and use a HighLow method, we can run through the math and get approximately the following estimated relationships, which is that each labor hour adds $3.33 of cost, and an estimate of the fixed cost is $303. If we do a similar set of calculations using, once again, costs as the thing to be estimated and the independent variable or the cost driver, right, or the base as setups, now we get a variable cost of $30 per setup and a fixed cost of $200. So these calculations, right, assume one or the other base is used. You can't combine these two calculations in some way in order to come up with an estimate of a multi-valued or a multivariate cost function. The point I wanted to make is that these estimates can't be solved and then put into this equation. Instead, these estimates assume a cost equation in which either the base is labor hours or the base is setups, but not a case where both can serve as a base. Could we use those estimates in order to allocate costs? And the answer is yes, we could, but there's sort of a practical problem here. In the first case, we see that $303 of the costs are fixed, and we know that amount of the cost is going to be allocated in an arbitrary way anyway. And 303 is 3 times what we know is the actual fixed cost, because if we look at the true cost function, we see the fixed cost is only $100. In the second estimate, we get a similar type problem, which is that we're still getting a much higher proportion being estimated to be a fixed cost than is truly the case. And of course, that means that those costs just get arbitrarily allocated between jobs. And of course, so that kind of breaks the relationship between the idea that we want to understand what the relationship is between the base and the amount of resource used. When we are stuck with fixed costs, we don't really get anything helpful from that relationship. So another way you might go about solving this is, let's say that we had this data and we were going to try to calculate a predetermined overhead rate. We might figure out what the average cost of overhead is, what the average number of labor hours is, and what the average number of setups is. And then we could do an allocation based on taking the average cost, which could be our estimate of next month's usage, divided by the expected labor hours, and come up with a overhead rate of $48.37 per labor hour. Or if we chose setup as the base, then we would take the cost, $387, divided by the average number of setups and come up with a rate of $64.50 per setup. So we could perhaps use those rates in order to allocate the overhead costs. So let's take an example of this. So here, let's assume that in a typical month, we're going to have 2 jobs, that the total amount of labor hours between the 2 jobs is 8, and that the total number of setups between the 2 jobs is 6. We want to think about how we might allocate the overhead costs, or how we might estimate the overhead costs based on what we know so far. We're going to look at what the overhead costs would be if we allocated using the true model, what the overhead costs would be if we use labor hours as the basis for allocation, and then how about if we use the number of setups as the basis for allocation. All right, so now we're going to work through those possibilities. So the first case, I'm going to use the true model, but of course we don't really know this, but it provides us with a nice comparator. The true model has $100 in fixed costs, so I'm going to split those up between the 2 jobs 50-50, just because I know no better way of doing it. And then for job 1, we're going to figure out what the costs would be if we had 5 labor hours and 2 setups. I'm taking this data and applying it into that equation. And then for job 1, you can see we estimated the amount of overhead cost to be $210. Then for job 2, once again, we take that data, apply it into this cost function, and we end up with $230. So notice that under the true model, we get a very close to 50-50 split of the overhead costs. And also notice that the overhead costs sum up to 210 plus 230 is about $440. If we assign overhead based on labor hours, then we have there's 8 labor hours, 5 of which are for job 1, and that gives us $242 of overhead assigned. And then for job 2, there's 3 labor hours, which gives us $145 of overhead assigned. So notice now that the allocation of overhead is much more heavily towards job 1, and that the total amount, instead of being $440, very much closer to $387. If we then assign overhead using the setups, so we would have 2 setups for job 1, giving us $129, and 4 setups for job 2, giving us $258. Now notice that much more of the overhead is assigned to job 2. Total is very close, if we add this up and this up, very close to $387. What have we learned? Well, we learned that if we knew the true underlying model, then we would get a fairly balanced allocation of overhead. But if we use a traditional method, like say labor hours to assign overhead, we get most of the overhead going to job 1, and if we were to choose setups to assign overhead, we would get most of the overhead costs going to job 2. And we can see that neither of these 2 methods, at least in this example, are giving us anything close to what the true, quote-unquote, true allocation of overhead should be. We find that labor hours, for example, used to allocate overhead, would overcost job 1 and undercost job 2, whereas setups would undercost job 1 and overcost job 2. So this is the sort of problem that we're faced with if we don't know what the true cost function looks like. Theoretically, right, if we knew the true cost function, then we would put the fixed cost into one overhead account and come up with a method for allocating that. We would take all of the costs related to labor hours and put them into another account, and then we would assign those using a rate like $20 per labor hour, and then we would figure out all of the overhead costs that are applicable to setups, and then we would assign those costs at a rate of $30 per setup. So theoretically, that would solve the problem. Of course, assumes that we know what these relationships are, and also that we can identify the specific cost to know whether a particular cost goes here, or a particular cost goes here, or a particular cost goes there. The application is much more difficult than the sort of theoretical overview. How do we implement an approximation to this approach? Well, I wish I could give you an easy answer to that, but essentially we're going to look at a couple of methods that have been suggested as a way of implementing an approach like this one in the upcoming lectures.